You're listening to the Global Ooge Podcast, where every week we learn about the world through the eyes of entrepreneurship. With your host, Ujwal Velagapudi.
I had the chance to speak with one of the leading clean tech and mobility investors in the world today. From assisting in getting a bill passed through the US Congress in 2006 to increase fuel economy standards and the very first electric vehicle incentives, to being one of the very first investors and serving as a board member for Better Place, which raised nearly $1 billion to build the world's first affordable all-electric vehicle. Michael Granoff has had an interesting perspective in the world of mobility, and after angel investing, eventually found his way into the VC world by founding Maniv Mobility, officially in 2016, boasting over 30 portfolio companies from 2 funds, which total over $144 million. It was an interesting conversation about where they invest, the growth of the industry, and how they assist their portfolio companies. Also, be sure to check out Maniv Mobility's podcast, Anything That Moves. Welcome to the Global Ooge Podcast, Michael. Thank you for joining us.
It's a pleasure to be here. Thanks for having me.
Thank you. And just so everybody can get a little bit of a background, even for myself, could you take us through kind of your personal background and how you had come across and started your current business today?
Well, I could give a very long version of that, but I'll try to keep it relatively brief. So I sometimes call myself an accidental venture capitalist. I never, as many people do, I never personally aspired to be a venture capitalist. But I've had an interest in the mobility space for close to 20 years. I live in Israel today, but until 8 years ago, most of my life I lived in the U.S. in the New York area. And I was a resident of Manhattan at the time of 9/11. And the years that followed, I really got very curious about some of the underlying global phenomenon. And one of the things I discovered was that there were a lot of distortions by one simple fact, which is that all of transportation, effectively globally, relied on a single commodity, which is oil. And I started an organization with a friend of mine who still runs it today in Washington, D.C. We worked on trying to get U.S. government to take this issue seriously, to understand that dependence on oil was more than an environmental issue. It was also a national security issue and a macroeconomic issue. And we were successful in passing legislation in the middle of the last decade, or 2 decades ago it would be now, around 2006, 2007, for increasing the fuel economy in cars and trucks sold in the U.S. over time. Part of that legislation also had the first in the world incentives for consumers to buy electric vehicles. And I did a kind of deep dive into what it was to have electric vehicles. And, at the time, you have to remember, this is before Tesla was a household name, and people associated electric vehicles with golf carts and thought these are very unpowerful and unsexy vehicles that certainly don't have nearly the ability to fulfill the things we've come to depend on cars for. But as I understood, actually what EVs had been conceived of previously and what they could be with the right energy storage and the right technological advances on batteries, I came to the conclusion that electrification of ground transportation was actually inevitable. The fact that I thought it was a good thing to accelerate for all the reasons I said before was not even part of that. I just thought over time, price of oil will go up, but price of batteries will go down, and they cross at a certain point. Actually, I thought that point was going to be a decade ago. One thing we didn't count on that no one really saw coming was that oil production in the U.S. was going to increase in the last decade after it had decreased for 4 consecutive decades before that because of new types of extraction technology. But I determined that I was going to make a big bet on electric cars, and I actually subsequently met two gentlemen, and one was a guy named Shai Agassi, and the other was a guy named Elon Musk. And you can probably guess that I did not pick Elon Musk, or I have taken a different path. But Agassi had a different model for scaling electric cars that was based on building networks and putting infrastructure, and that was a company that we founded called Better Place, raised about $1 billion, built out a whole network of infrastructure across two countries, Israel and Denmark, and ultimately did not have the staying power. A lot of mistakes were made on execution, which there's a lot to learn from. There's a book about it. But subsequent to that, I was then in Israel, and I began to advise some startups that were looking at automotive and the intersection of automotive and technology, and ultimately ended up doing some individual investing, some angel investing in these companies. And then Israel gave birth to an entire crop, hundreds of companies around automotive and mobility technology. And I realized that there was real opportunity there. I started talking to people about it. They got excited about it, wanted me to invest for them in that sector. That's how we ended up accidentally putting together fund number one, and subsequently went out and raised a second fund backed by a lot of the world's large automakers that we're investing out of now. I'm proud to say that in our second fund, we've diversified beyond just Israeli mobility technology. We're now invested in companies in 6 countries. And most excitingly, the most recent investment we made was the first investment by an Israeli-based fund in a technology startup in the Arab world, and that's in the United Arab Emirates as a result of the normalization agreement that our countries signed just 2 months ago. So a very exciting time on investing, on technology, on international relations.
Oh, wow. So just to take us back, in 2015, you had started Maniv Mobility with Fund 1 and then subsequently Fund 2. And then are you currently a part of or looking to raise for that next fund, or where in that process are we today?
We're still investing our second fund. It's a $100 million fund. We've invested in 9 companies out of that fund so far. We still have several more to go, and then we'll think about what we do after that.
Okay. And one thing you said, Michael, was just 2 months ago that agreement had come in place between, you said, the Arab world and Israel. Can you go a little bit more into that? I'm not too familiar with that.
Well, sure. Israel was founded in 1948, and the Arab world rejected Israel's existence from that point forward until 1979, and Egypt signed a peace treaty with Israel. And then in 1994, Jordan, another of Israel's direct neighbors, signed a peace treaty. However, the other 25 or so members of the Arab League refused to make peace with Israel, to recognize Israel, and in fact boycotted Israel. Luckily, this year all that changed pretty dramatically. And in August it was announced, and then in September there was a signing ceremony on the White House lawn between Israel and 2 Arab countries, United Arab Emirates and Bahrain. And subsequently, there have also been agreements announced with several more countries, including Sudan and just most recently Morocco. And rumors are that there will be several more that will follow. And the most important thing about this, in my mind, is that while we are very happy that we've had a long peace with Jordan and with Egypt, it's not a peace that comes with a lot of exchange. There's not a lot of international commerce between those countries, and there's not a lot of interpersonal contact between. I don't personally have friends, unfortunately, in Egypt or in Jordan. However, in just a couple of months, I can say I now have relationships with dozens of people in Dubai and Abu Dhabi and the Emirates in general, and now also in Bahrain, and they're very excited to do business with us. As I said, we invested in a startup based in Dubai, operating in Abu Dhabi, and we're this week. There are large delegations from those countries here in Israel, looking at touring, looking at technology companies. If it wasn't for COVID, it would be even more. And there literally are, despite COVID, tens of thousands of Israelis, mostly tourists, some business people, who have gone now to Dubai. It's one of the few places Israelis can now go without having to quarantine because it's considered a green country. So, this development has been just tremendously exciting. In 2020, which has been a challenging year for all of us, this has been, in my mind, the biggest bright spot, and I think portends wonderful things for all of us for the future.
Wow, that truly is amazing to be able to, especially as a neighbor, proximity-wise, relatively close, and to be able to have that, like you said, the most important thing is that exchange, or at least that commercial impact, and one, the culture, but also two, the commercial aspect between two nations actually working together. And was that really a culmination of events? Has this been decades in the making, or was it any particular change in political leaders, or just what was that? Do you think that truly triggered it, or had that tipping point?
The Emirates are a very highly developed country, and even though some of the Emirates, Abu Dhabi in particular, have really been the beneficiaries of a lot of oil wealth, the Emirates in general, Dubai in particular, I think has really attempted to diversify their economies with tourism and industry and trade and aviation as a big one. Emirates Airlines, one of the biggest in the world, coming from relatively small country, and Etihad as well. So these are really advanced economies, as is Israel, and it was very unnatural that we didn't have a relationship. And I think without getting too political, the Trump administration's Middle East team did take a very, very different approach than had been taken in the past. In the past, it was said very unequivocally that there was no way that Israel would succeed in making peace with Arab neighbors until it had resolved the issue of the Palestinians. And Israel has certainly tried for decades and decades to resolve that issue unsuccessfully. And I have my own views on what's the sticking points have been there. But unfortunately, the Palestinians have refused every overture we've made to attempt to come to a settlement between our peoples. And I know we will have to one day because we're living with each other for the long term. But what changed is that members of the Trump administration said to the rest of the Arab countries, are you going to continue to wait and miss the opportunity that's presented to you by doing business with Israel? And there was, I'd say one brave leader in the Emirates who was first into the water and said, let's do it. Let's do it right. Let's do more than just diplomatic relations. Let's do the whole thing. And I can tell you that within days of the announcement, my LinkedIn was flooded with requests, and I immediately understood that this was a very, very rich potential partnership. I've since learned that it's more than just a business relationship, that there are Emiratis that are really, really interested in cultural exchange, really interested in understanding us. And I think Israelis have already shown a real interest in understanding the Emiratis and the Bahrainis in particular so far. So it's been it's loomed very large in my personal and in my business life over the last number of months. The fact that we were able to be the first fund here to invest there was exciting, but the ability to travel there, to have really daily communications with people there, it's been really, really wonderful, and I hope it portends great things for all of us in the future.
Oh yeah, I bet that absolutely is amazing. I love seeing that when you can have that shift and that connection between such large groups. As far as Maniv Mobility, what is currently your investment thesis when, I guess, that fund number one, how you had started to invest in some of those companies, and how has that shifted? Because 5 years at least for me in this space, seems like forever ago. So has that shifted at all? And
yeah.
what are you looking for in the next 5 years?
It's a great point. Really, really important question, because you're absolutely right that the reality is when we started investing 5 years ago, there was, if your listeners are familiar with the Gartner hype cycle, the Gartner Group has a thesis on how technologies are developed, and then the public becomes aware of them, and then they reach a certain crescendo of hype and excitement that they can never fulfill, at least not quickly. And so then they fall off into the trough of disillusionment. I saw this happen early in my career with the internet, where in 97, 98, 99, we built up to this extreme level of excitement. In 2000 came crashing down. But of course, then you enter what's called the plateau of productivity. And obviously the internet did that and much more, as we're demonstrating with this conversation right now. But in mobility, the analog is self-driving cars, autonomous cars, which is what everyone associated with the new mobility future 5 years ago, and everyone was convinced that their kids were not going to have to get driver's licenses, that the Ubers were going to soon come pick them up without drivers, and that this was the major breakthrough. And I don't want to minimize the importance of autonomous technology, in which billions has been invested by large companies, by startups and more. In fact, we have many companies in our portfolio that are related to autonomous. We have a company that has a high resolution radar, company that does teleoperation, which is like remote control driving, that has application for autonomous cars, and several other companies along those lines. But I think the idea of robotic taxis, as they were understood 5 years ago, kind of went into that Gartner trough of disillusionment. And I do think it will come out and hit a plateau of productivity sometime across this decade. I think it's going to be in lots of varying forms, and I don't think you're going to have robotic taxis as a main service in major cities in the near term. But you already have several demonstration projects that are working quite well. And when sort of the product market fit is perfected, and when people are comfortable that it's not only safe for them to take these vehicles, but to have them in their communities, and when that comfort is reflected in policy through their elected and appointed officials, then I think we'll move along. But I think the more important answer to your question actually is that a lot more has happened in 5 years than simply watching autonomous vehicles go through this shift. One of the things that didn't exist 5 years ago was the term that Horace Dedew founded, the term micro-mobility. I don't know if your listeners are familiar with what micro-mobility is, but unless they haven't been to one of the major cities around the world in the last few years, they certainly know what it looks like. And that's the shared bikes and shared scooters that are on the streets of so many cities. And in fact, we have two companies in micro-mobility in our portfolio. One is the one in UAE that we just invested in, which is called Phoenix, and which is scooters now deployed in Abu Dhabi and in Doha, Qatar, and in some other locations throughout the Gulf. And the other is a company called Revel, which deploys electric mopeds on the streets of major American cities, most prominently New York City. And these are vehicles that, first of all, operate on batteries, so there's no emissions, and which you can rent by the minute. And you can take anywhere in the service area. And we found pre-pandemic in New York especially, we found that people were really loving to use these mopeds really in place of taking Ubers or taking taxis. So really replacing gas miles in big vehicles with electric miles on small form factor vehicles that are actually also fun to operate and less expensive to rent. And during the pandemic, one of the things that we never could have foreseen is it actually has become very popular among people who might not otherwise have taken them, but who are nervous about public transportation, nervous about subway and buses. We all hope that the vaccine gets distributed and is effective, and that mass transit returns in the coming months. But I think a lot of those people have also understood how fun it is to take a moped or even to take a scooter in other places. And I think they'll continue to do that. And I think this is one of the trends they have to watch. And I think cities, especially during COVID, have really begun to think how to redesign themselves to accommodate smaller, lightweight vehicles to make sure that it's safe and convenient to use these types of vehicles in their cities. And Paris just had its mayor reelected. She ran on a platform, I think, of taking away half the parking in Paris to make more room for lanes for bikes, for electric scooters, and so forth. And here in Tel Aviv, it's the best way to get around. There's no doubt about that. Tel Aviv is a very congested city. It's relatively flat, and the weather is good, and the scooters are numerous. So if I have to go to a meeting a kilometer or two from my office, I got a helmet nearby, and I'll always hop onto a scooter.
And so, Michael, as far as one side, you said, there's going to be the vehicles, there's going to be the scooters, there's going to be the bikes. But then how about, like you had with your with the startup, the actual infrastructure? Can you go through, if you are investing, and what that looks like, and what that and how that exactly has played out over, let's say, the last decade, since when you were working on it to today, in terms of building out that infrastructure with sensor technology, with the networking aspect, with the communications, and how that plays in conjunction with some of these vehicles that are actually.
Well, there's lots of different types of infrastructure. People use it to refer to many different things. What we were doing at Better Place a decade ago was infrastructure for electric cars in particular, and that included the ability to charge them, and in our case, the ability to switch batteries, which is the controversial thing that we did in that startup, which I still think actually was the right idea. But unfortunately, our failure, I think, marked that as an idea. And instead, we've gotten really kind of this space race on battery range for electric cars, which I actually think is bad for electric cars, because most people don't need 400, 500, 600 miles of range. They need 150 miles. And if most electric cars aspired simply to that, then electric cars would already be much cheaper and more efficient, because they wouldn't be carrying around the weight of extra battery they don't need. But that's not what you ask. Infrastructure. So there's electric vehicle infrastructure. There'll be a lot more of it. It'll be in different forms. It'll be in slow charging in garages and in fast charging, some in urban areas, but most of that along highways. Tesla's obviously built out their own supercharging network. We're seeing other networks that I think are going to get built for a variety of electric cars to support really all cars with plugs. The Biden administration in the U.S. now has pledged to build 500,000 charge points across the country. That'll be important. So that's one form of infrastructure. When we talk about micro-mobility, what you really need is a different form of infrastructure, and that's mostly bike lanes or similar protected lanes that allow people to safely transit in lightweight, unprotected vehicles. We're seeing more of that getting built out from New York and Paris, as I said, here in Tel Aviv, and many other places, and I think COVID has accelerated that trend. And then there's the other types of infrastructure you referred to. And yeah, there are increasing sensors, cameras, other things around cities. Most of that kind of digital technology is not that difficult to deploy, and we have some companies. Nexar comes to mind, that are putting cameras in cars to bring data about cities and about vehicles and traffic flow and on all the rest. And I think we'll see more of all of the above.
If you had to choose one company out of your current portfolio that you think would make, if they do succeed, and if they hit their targets within the next couple of decades. What company do you think would make the greatest, most disruptive impact?
That's asking me which of my kids I like the best. Look,
Right, right,
look.
right. Or is there one, maybe not a startup, but maybe one particular idea that you can share?
I think some of these themes we've been talking about, which many companies across our portfolio actually are part of. The themes are diversity of vehicle types and diversity of business models for particularly urban mobility. And that's really, I would say, if there's one thesis that underlies what we do, it's that it's that people use cars, sedans, SUVs, four wheels, internal combustion engine. I buy one. I buy a new one every 4 or 5 years. I make sure that it's got room enough to be able to take the once a year trip up to the mountains. But then I also drive it into the city center for work every day, pick up the kids from school, do the shopping. What we now have, because of the digital world that we're living in, is the ability to sort of modularize those pieces and to buy, instead of buying vehicles, and people will still buy vehicles, but I think maybe not as many. And what people buy more of is trips. So, I need to go a mile and a half. Maybe in the past I would have driven, or maybe I would have taken a cab, but maybe now I can take a scooter or a ride-hail vehicle, or an electric ride-hail vehicle, or I think it's the diversity that we have a broad portfolio. A lot of companies that they're very different in type, many of them, but they're all contributing in different ways to bringing this diversity of options to the streets, so that mobility is not fully dependent on oil, so that it is not out of reach for people who may not be able to afford a car, and that it makes it more convenient and actually, in many instances, more fun for people to get from A to B.
Mm-hmm. Okay. And you had mentioned, I believe it was 6 different countries that you've invested in so far. What?
That's correct. Fund one, actually, it was just the U.S. and Israel, but we've added 4 countries in Fund two.
Okay. Okay, great. And so, when across your entire portfolio, how has, or if at all, has the company's vision changed or differed, or has there been any slight nuance with all 6 of these, or in specific, because of their current location or the founding team's location, has that played a part at all with maybe the exact same
Yeah.
scooter-based company that you saw in New York and maybe 2-3 different other countries, because of their local regulations, because of the consumer profile? Has that changed?
Most funds tend to invest close to home, but most funds also tend to invest across a wide range of types of companies. We're kind of the opposite. I don't know much about fintech or cybersecurity, aside from automotive, of which we have 2, or SaaS software or medical devices or anything else. I know. I hope I know a lot about mobility, and I think what works in the streets of Tel Aviv may not work everywhere in the world, but it'll work a lot of places that share some of the same characteristics. The technologies that underlie highly automated vehicles are going to come to the vehicle manufacturers from wherever they can find the best technologies. And so we do the same. We cast a wide net geographically, but we have a very narrow focus in finding companies that will contribute to a safer, more secure, more accessible, and cleaner set of transportation solutions for consumers.
Okay, great. And actually going back to your investing style, or just how Maniv Mobility came to be, how did that, if you can walk us through kind of 2014, 2015, because you said you were investing in companies as an angel, so that's one aspect. But then, how did that actually transfer into building out this company as a VC firm? And can you walk us through some of those steps of, all right, well, I'm doing it as an angel, let's do it as a VC firm and raise capital. So, how was that raising process, and how were you able to build out that team specifically for?
Well, at the beginning, I was doing the angel investing. I brought on a couple people to help with that. We ended up hosting here in Israel a bunch of delegations. We brought them over to introduce them to startups, to just sort of get people to get to know each other. And in some of those groups and in other forums where I met folks that I knew and folks I was introduced to, the more that they understood just how broad the opportunity set was in the intersection of Israeli technology and automotive and mobility, the more they said, we want access to that. And as I looked at ways to sort of leverage my angel investing to be able to help other people, the structure that made the most sense was the traditional venture route. I resisted it for a while, frankly, but I'm glad that I was persuaded to go down that route and to turn it into a more conventional fund, because we really had the opportunity, I think, to to invest in some great companies.
That's you. And how was that? Did that capital raising aspect, did that come naturally because you had hosted all these people? You had shown them the value in investing?
I started out doing it with my own money. So people were basically just saying, can I get a share in that? And that's really how it started.
And going back to your startup, how because you said you raised almost $1 billion for that company, how did that process kind of help you with what you're doing right now, or has it at all? Because you've been in that position and then now you're on the other side of the table.
There were a lot of people that were involved in raising money for Better Place. I did very famously get the first large check. There's a famous book about Israel's innovation system called Startup Nation, and if you read the prologue to that book, which I think the authors and myself kind of wish wasn't there, because it's a reminder of Better Place that didn't work out, but it also tells that story. But there's a compelling story around mobility, the mobility future. I think we're seeing it play out in many places now, including in the SPAC market, the special purpose acquisition corporations that have proliferated on Wall Street this year and have found mobility startups to merge with by the dozen, really. And I think that's kind of just the most recent example of the potential that this whole sector has.
Mm-hmm. Yeah, that is pretty amazing, especially this year with those specs. As far as what you see, because right now you've invested in the 6 countries, how, or maybe if you can share some of those countries, and then I'm trying to see, do you see the same growth, same innovation coming from developing and emerging nations, or has it primarily been in developed countries where the infrastructure is there, whatever that word means, from a networking standpoint, the actual, roads and that sort of infrastructure, or the capital is there, the tech ecosystem is there? Have you seen pitches or even viewed countries or even invested in other markets that are slowly on the rise?
Look, I think people have been for decades now trying to figure out what is the magic sauce of Silicon Valley that can foster innovation in other places. And I think second on the list, in basically all estimations, at least over the last 15 years, has been Israel. And there are lots of reasons for that. The Startup Nation book goes into some of the reasons why that might be true. But I think the most important thing is that once you sort of hit some level of critical mass, it becomes self-fulfilling, and it becomes something that people do, and it becomes a place people want to be. And so that's what we've been lucky enough to create here, and I hope we'll continue to build on. But I definitely see new emerging innovation ecosystems, and the most recent one I've seen is in Dubai, where we made this one investment, but where we see other potential investments for us, and definitely for others in other sectors of technology. India is a place we haven't yet made investments, but we see lots and lots of activity there, and it's getting more and more interesting. And obviously, there's a tremendous amount of talent there. As an American, I'm frustrated by the fact that U.S. government has not done more to encourage, as we always did in the past, really exciting and talented entrepreneurs to set up shop in the U.S. It's well known, of course, if you go through all the great companies of the last generation, they're really either immigrants or children of immigrants who founded them. And the Startup Nation book actually goes into a whole chapter on why that is likely the case. And it bothers me that U.S. policy has stymied that, but it has meant that this talent has stayed in its home location for the most part, which are places all over the world. And I think that's contributing to kind of a diversification of innovation geographies. And we're in some ways the beneficiaries of it, because a lot of these places are nearer by to us here in Israel than Silicon Valley is. So, that's kind of the good part, is that there's innovation coming from lots more places these days. But I still think that there is a value to having hubs. Silicon Valley is the biggest by far. I think Israel's the second biggest, but I think we'll see a lot more thrive throughout the world.
Can you talk a little bit more about Israel being that second hub? How has that shift? I mean, maybe you've only been in Israel, you said, living there for the better part of the last decade, but how, maybe in your prior visits, how has that shift changed? And how is it today as far as, someone looking to go and get into any sort of startup, as far as raising capital, finding the network to get a co-founder, to having advisors and building out that team? How does that look today as opposed to maybe 15?
Well, as I said, Israel, up till now, hasn't had the benefit of a nearby ecosystem with which to trade. And it's a small country now, up to about 9 million. We're growing, but it's still not a market that entrepreneurs aim for. And so that one of the consequences of those two factors is that every Israeli starting a company has had to think very, very shortly after figuring out what they wanted to do, how to go global and how to reach global markets, and how, in many, many instances, to set up a business development office in the U.S. Or in Europe, or both. So, as technology has gotten more digital, and as the tools to do business have gotten more robust, it has obviously played right into Israel's core competencies. And the digitization technologies in advanced software and sensors, in automotive, in cybersecurity, all these things have applied themselves to my sector, to mobility, and that's why we had, in the last number of years, this explosion of innovation around automotive mobility technology in Israel. But obviously, the Israel innovation ecosystem is much broader than that, and really everything around these core competencies in software and cyber and sensors and SaaS systems has been coming out of Israel now for the better part of 2 decades, and it's exciting to see.
And just curious, when you're kind of going through that, with a lot of the startups that you've seen that you're investing in, on the flip side, is there a market, or do you see multiple markets which you could share for your traditional businesses that may not need capital or VC money, that can be sustainable, that can be bootstrapped or relatively bootstrapped, with maybe very little capital, and to build out, for example, one thing that I'm thinking of in my mind are auto shops, where, all right, there's auto shops catering specifically to electric vehicles. And so kind of on that sense, more traditional path, what auxiliary businesses within this sphere do you think will change that are that we don't have today, that a lot of mom and pop owners are going to be?
The specific example you gave, I wouldn't encourage investors or entrepreneurs, because the nice thing about electric vehicles, they don't need a lot of service. So you don't need to have the same kind of network of auto repair shops that you have today. However, your broader point is right on. And in fact, I think what we're seeing is the ability of, and this we see in the mobility sector for sure, the ability of digital tools to reach into traditional legacy businesses and actually help strengthen them. And we've seen this, I think, particularly acutely during the COVID crisis, because mom and pop shops that you described have really, been forced for their livelihood to be able to figure out how to deliver. And they've been able to do that right at the moment when there are a lot of companies that are providing digital tools to enable delivery to all sorts of small businesses. I look out the window where I am now, and you'll see 2 or 3 companies up and down all day long, delivering food, delivering other things. It opens up a whole different sales channel for lots of businesses, which they've obviously desperately needed in months where they haven't been able to open in person this year. But I think there are lots of other examples, and I think digitization technologies have taken over information communications. They're taking over mobility, and they're not done yet.
Right. Yeah, that's definitely true. It'll be interesting to see how all those companies do shift, as like you said, all these auto shops, a lot of these other types of businesses that are servicing or catering to the automotive world, or some of these mobility companies today, and how those shift in the next 5, 10, 20 years. As far as the actual fund and the business of venture capital, would you be able to go a little bit into that, as far as how it's structured, how kind of the operations of it, actually receiving some of these pitches from interested founders, how it's vetted throughout your team, and then thereafter, once you actually invest, how that relationship looks?
So we, as a fund, we raised money from basically 2 types of parties. All those parties are looking for a return on their investment. They're looking to get more money back in the future than they give to us, obviously. And some of those are simply ordinary financial investors that are just looking for that return and are betting that we'll be able to give them more money back than if they put that same money into the stock market or into bonds or something else. I hope that turns out to be true, but in this business, it does take a lot of years to actually prove that. And then the other type of people that give us money are strategics. Like I said, we have many automakers that are investors in the fund. They want to watch the technology through our eyes. They want to have access to early stage technologies that hopefully they can get an eye on before their competition. And particularly, I think us being here in Israel, where there's been so much innovation that we talked about, they had a particular interest in following our fund. And then we take those financial commitments from all those investors, and then we go out and find companies, and that's really the day in, day out work that we do here. We get sometimes upward of 100 companies a month that come through our doors, either find us on the web or through individual networks and connections. And like I said, started out, most of those were right here in Tel Aviv and in broader Israel. And then more recently, it's become very, very global. And this year, I think it's accelerated the globalness of it, ironically, because there's no travel, which ordinarily I do plenty of. But now, when there's no in-person meetings, it's the same experience to speak to a company that's 5 blocks away as it is around the globe. So we've not slowed down in looking at companies all year long. We've made investments, and we're going to continue to do that. But anybody who's out there who has a great idea for a mobility startup, we're the address.
Yep. And how's that relationship look once invested, or once the capital is deployed and invested in?
So we work very, very closely with our portfolio companies in their first several years of business. Most of the time, we're actually the only investors at the seed stage of the company. Other times, others come in, but we lead. And then we're in touch with those companies in a formal way on usually a monthly basis in the early going, and sometimes a little less frequently. Informal basis could be every day in texting groups where we're responding to the news of the day, answering questions on products, on strategy, on markets. Again, I wouldn't know how to do this for any other kind of business, but when it comes to mobility and automotive, that's where we specialize, and so hopefully we can give guidance that really helps these companies get the product market fit right quickly and move to scale.
And within that specialty, is it heavily reliant upon you, or have you built out your team where you've got folks that are technical experts that are experts within a certain field and really can
we have a team
provide
of
those
9
services?
that includes 6 investment professionals as well as a function around information, content, and news within the mobility sector. So we try to keep all of us on the team very much at the highest level and the most current thinking in the sector. We talk about it all the time between us. We exchange news of the day daily. And we've got our own podcast, which people are welcome to subscribe to, a newsletter. All this can be found on our website at maniv.com, M-A-N-I-V. And, all that contributes hopefully to making us better investors and better stewards of the portfolio companies that we help.
That's amazing. That's great. Yeah. And once again, thank you so much, Michael, for taking the time and to walk through this entire, just all these questions that I've been having. But I absolutely do love the space that you're working in, and especially that you've had your career in. So, and to be able to do that across so many different countries is amazing. And what you shared just 2 months ago, having the opportunity now to participate with so many other nations, I think that's even more amazing and beautiful for the coming year. So
yeah, absolutely. Thank you very much for the opportunity.
Thank you so much for listening to the show this week. Please do leave a comment on your thoughts about today's episode, and make sure to hit subscribe to get the latest on the Global Ooge. Or if you already have, please share with a friend that you think might enjoy.